Hey there, everybody. Thomas with Basecamp Trading. It is Wednesday, July 24th, and we're going to take a look here really quick at crude oil. And specifically, we're going to discuss what happened today with the EIA report and why you do not just blindly buy or sell based on the report. Now, I always tell people when you're trading, when we can get technicals and fundamentals lined up, meaning they're both in agreement on the direction the market should move, then there's a much higher probability of that trade moving our direction and following through. Now, that being said, the EIA report that comes out on Wednesdays is a great announcement to pay attention to for fundamental analysis, because it tells us whether or not there was a build or a draw in the supply of crude oil, RBOB, and heating oil. Now, today, there was a really large draw. They were expecting like a 3 or 4 million barrel draw, and we had like a 10 million barrel draw. Okay, so fundamentally speaking, that means demand was higher than expected, and it should cause prices to go higher. Okay, now what ended up happening today, though? Instead of going higher, crude shot up and then turned right back around and came shooting right back down. And we're seeing it follow through right now on a bear flag on the 30s. But it shot higher initially and then turned right back around. So what you want to pay attention to is you don't want to just blindly be buying this, because what actually happened right here at the top, and again, we have a bear flag triggering right now. I'm actually short RBOB at the moment. Locking in $200 contract. And I'm out. What we had at the top is the initial reaction was up because of the announcement, but then we ended up doing what we call around the stops. And around the stops occurs when you break through resistance, turn around and pull back, and it left what we call a topping tail, a really long topping tail. And what that's telling us is there's an unwillingness for this market to rally. The buyers came in, pushed prices higher, but they couldn't hold on to it. Sellers turned right back around and said, no, we're heading south. And we ended up seeing it pull right back down. Now, this shooting star, if you were in the trading room, or this topping tail, if you're in the trading room, you know we were selling this on a breakdown below 57.25. That was the low of that candle, which is where it triggered. And it ended up following through very, very nicely all the way down till we hit significantly undervalued, which is the lower red price bar segment here. And then we said, okay, this move is done. We've gotten extended now, and it's time for it to go back into consolidation, which is what we did. Now we have a bear flag, and it's starting to make another leg down here. So my point with saying all this is, do not just blindly follow technicals and do not just blindly follow fundamentals. Pay attention to both and make sure you're reading what the market's telling you correctly. Okay, don't just get a mindset of, okay, there was a big draw, so I'm going long crude oil, period. Because if the market's telling you it's going to go the other direction, you need to listen to the market. All right. That being said, what are we watching with crude oil here? Well, the main thing we're paying attention to is this trend line. We've now tagged 3 times. This will be the 4th time we come down to it. If we can break this trend line, I'm looking for crude to have another leg down on the dailies. So if you look at how this market's been moving, we went acceleration, expansion to the downside. Now we're compression back to the upside. If we can break the trend line, we'll look for expansion back to the downside to begin once more. So be keeping an eye out for that. So that's it for today, though. I hope you enjoyed it. Don't forget to hit that like button and subscribe if you haven't already done so. That's it for today. And until next time, everybody, happy trading.